Hello, good morning, ladies and gentlemen. First of all, I would like to apologize for postponing your class. I think twice. I postponed it to 11, then quarter past. I had technical issues that I was attending to on my machine. My apologies for that. Welcome to our session for this week on, we're going to start on bank reconciliation. And I hope you managed to do your assignments because I think they will be closing on Wednesday. So please, if you haven't done so, can you please make sure that you do so on time? Right. Let me just open the document that. Right. We're going to deal with bank reconciliation. Bank reconciliation statements. Right. Just a minute. All right. Every organization, normally they will keep a lot of money. Right. And that money has to be banked. There are various reasons why money is to be banked. Right. Number one, the law. You are not allowed to keep a lot of your money with you at your home, even if it's yours. Number two, security. You know that if you keep your money at home, there is a possibility that it can be stolen. But so it can be better to put it in a bank. Number three, there's what we call the opportunity cost of money. If you keep your money at home, there might be a chance that, like, in fact, your money will not grow. You will just have the money that you have. But now, if you put it in a bank, there's an opportunity to what? To earn interest. Right. So because of those things, that's why businesses have to bank their money. That's the reason why businesses have to what? Have to bank their money. Right. Now, when you bank your money, you don't just bank your money and then you relax. You keep a record. You keep a record of the money that you have deposited in your bank account. Right. Let me just show it here. the business banks its money, it makes a record of deposits and withdrawals. In the following records. Right, we have number one, cash receipts journal from our previous topic. So all the money that we receive, we record it in the cash receipts journal. Number two, we have got the cash payments journal. All money that is paid out will be recorded in the cash payments journal. Then at the end of the month, they combine the payments and the receipts in what is called the bank account. So please, the bank account is prepared in the ledger of the business, and it is prepared by the business. So they will prepare what we call a bank account, right? So the bank account will be the one that will determine the amount that they have in the bank. Right. So now, when you've got money in your bank account and you are keeping a record, at the same time, the bank will also keep a record. And the business can request that record. Someone is saying they cannot hear me. Others, can you hear me? Can you hear me, my friends?
Yes, sir.
Okay, so maybe I think it's on their part. Thank you so much. So you can request the following from the bank. But we know that with technology, you don't have to go to the bank anymore for you to get a bank statement. You can even get it on your phone. It is readily available. Or you can go to the bank and get the bank statement. Right. So we're saying the cash receipts journal, cash payments journal, and the bank account are records of the business, whilst the bank gives us the bank statement. Right. And so because these two parties are recording exactly the same thing, we would expect that at the end of the period, whatever is recorded by the bank should also be recorded by the business. So we expect that if we are saying our balance is 10,000, the bank should also say our balance is 10,000. But it so happens that it doesn't happen like that. You would find that when we are saying our balance is 10,000, the bank can say you have got 11,000 or you have got 6,000. Now, because of those differences, that's why we have to do a bank reconciliation statement. So a bank reconciliation statement tries to explain the reasons for the differences between the bank and our records. All right. Possible causes of differences. Right, we've got bank charges. Bank charges, okay, let me just say one, items appearing on the bank statement, but not in the business records. That is the CRJ and CPJ. Right, we have got things like bank charges, interest on overdraft. If you have got, you can arrange with your bank so that they can allow you to have what we call an overdraft. With an overdraft, that means you can withdraw more than what you have in your account. So they will charge you interest for having that overdraft. Then we can also have interest on favorable bank balance. If you've got money in the bank, they can also give you interest. Right, we've got direct debits. Stop orders, standing orders, debit orders. Right, all these items, with some banks, they are different documents. With some, they can be the same, but their effect is the same. These are transfers that are made directly from your bank account. For example, you can go and sign up with a supplier that every 20th, money should be transferred from your bank account to your supplier. Right. So you find that the moment that is 20, the bank will transfer the money. But we in accounting, we don't record anything until we see proof that it has happened. So we only record the transaction when we see that the bank has actually transferred the money. Right. Dishonored checks. Dishonored checks, also called RD checks. RD for a refer to drawer. These are checks that we have paid out, but we have received, and banked, but they've been rejected by the bank. Maybe the person that gave us the check did not have sufficient funds. Right, we can also have direct deposits. I think you know that in modern business, customers do not have just to come to your premises to pay their account. Normally, they would have to deposit into your account. So a customer can deposit and forget to send you the proof of payment. Right. So a direct deposit can also appear on the bank statement, but will not be on the bank account. Right. Will not be, sorry, would be on the bank statement, but not in our books. So these are just examples. Number two, we can have items recorded in the business books, but not on the bank statement. We have unpresented checks or outstanding checks. These are checks that we paid, but the recipients of the checks, you have not yet gone with the money to the bank to deposit it. So the bank will not know until the moment that these guys go with the checks to the bank. So the bank will not know about those checks until the day that those guys go with the checks to the bank. So in the meantime, it will just be outstanding. Because there are some people, if you give them money today, they might not go with it to the bank now. They will only do it maybe after a week or so. So those will be what? The outstanding checks or unpresented checks. All right, these unpresented checks or unpresented checks, they can also become in the long run what we call stale checks. Right, an outstanding check becomes a stale check when it is more than 6 months. When it's now more than 6 months, that means it's no longer valid. It will no longer be valid. So the bank can no longer honor it. They can no longer recognize it. So now, because the bank can no longer recognize it, we have to reverse that payment because it's like it's no longer valid. It's no longer valid, that check. Right. Right. We also have what we call outstanding deposits. Now with the outstanding deposits. We're saying these are deposits that have been made by the business, but the bank has not yet cleared them. For example, it's a check, it might take days to clear. Or maybe we went to deposit on the 31st, and by that time that we took the bank statement, the deposit had not been completed. So it can be an outstanding item. Right. Then number 3, errors made by the business in CRJ and CPJ. Then number 4, errors made by the bank which are reflected on bank statements. So as long as an error has been made either by the bank or by the business, that error will cause a difference between the bank and the business, which will cause our balances not to agree. And when that happens, then we would need to do what? A reconciliation. We would need to do a reconciliation. So as long as we're not agreeing with the bank, then we have to do the what? The reconciliation. Right. Procedure for performing reconciliations. Right. Normally, a reconciliation is performed at the end of each month. It's normally performed at the end of each month. So at the end of each month, we compare our books to those of the bank and see if there's a difference. As long as there's a difference, then we perform a bank reconciliation. Right. So first of all, we check if the reconciling items from last month's bank reconciliation appeared on the bank statement. Right. What we call reconciling items are those items that need to be sorted by the bank. We can't sort the books of the bank. We can only sort our own books. So at the end of the day, those items that need to be sorted by the bank will go to the bank reconciliation statement. So at the end of the period, when we start the new period, now we are in May, we have to check all those things that were on the bank reconciliation for March. Remember that at the moment we'll be reconciling the bank statement for April. So we check from March, all the reconciling items that were on the bank statement, on the reconciliation statement, did they appear on the bank statement this month? If they appeared, that means they are settled. Then they are no longer a problem. But if they didn't appear, that means those transactions will still be outstanding and they still have to be attended to when doing the current month's bank reconciliation statement. Maybe it's a check that we paid out and by last month, the person had not yet gone with it to the bank. If we find that this month again, he has not gone with it to the bank, that means it's still an outstanding check. Right. Then number 2, compare CRJ to items appearing on the credit side of bank statement. So the transactions that we record in our cash receipts journal on the bank statement, they appear on the credit side. I think if you check, or if you go to the bank and you just check your statement, you will see that the money that you put in, it will be recorded as credit. we should know that in our books we record as debit, but the bank records it as credit. Why? To you, the money that you put in a bank is your asset. But to the bank, they view it as a liability. That's why me, as the person putting money in the bank, I would record it as a debit, which is an asset, whereas my bank will record it as a credit. Because to them, that's a liability. So you should make sure that you understand that when we are doing the CRJ, you compare to the credit side of the bank statement. Then you compare CPJ items appearing on the debit side. Of the bank statement. So the items that are in our cash payments, should be on the debit side of the bank statement. Right? The aim of comparing is to identify those transactions that we are agreeing with the bank and those transactions that we are not agreeing. So that's the main reason why we do a bank reconciliation. We do these comparisons. So through this comparison, we'll be able to see, oh, we agree here, we don't agree here. Is that right? Then those items that we are not agreeing are the ones that we would need when we are doing our bank reconciliations. Right. Then after comparing, during this comparison stage, we are going to identify those transactions that are a problem. We are going to identify those transactions that are a problem, which is the items that we are not agreeing with our bank. So we'll then we'll update the CRJ and CPJ. How do we update? We enter all bona fide transactions appearing on credit side of bank statement on the CRJ. Then we enter all bona fide transactions appearing on debit side of bank statement in the CPJ. Then we correct errors in CRJ and CPJ. So whilst we are doing that comparison of the bank statement in our books, we are going to see maybe some transactions whereby we made errors. So if we made errors, then we'll have to correct those errors. How we correct them depends on the nature of the error that was made. Right. Then after updating our CRJ and CPJ, then we prepare the bank account. We then prepare the bank account. Right. After preparing the bank account, we then prepare the bank reconciliation statement. Right. Now I'd like to look at the general items that we normally record in the CRJ, CPJ, and in the bank statement. Right. In our cash receipts journal, Normally, when we do the bank reconciliations, we only have 2 columns. We normally use just 2 columns. Right. We normally use our details. Then bank. Right. We start with our subtotal. Subtotal is the total that was there already in the cash receipts journal before the reconciliation. Then we enter the following in our bank reconciliation. Right. We enter direct debits. Direct deposits. Interest on favorable bank account. These transactions, if you can see, that means we are receiving money. When you've got a favorable balance, you receive money. That's why we enter into the cash receipts channel. Direct deposits, it means our clients are depositing money in our account. That's why we enter it in our cash receipts channel. We've got stale checks. Stale checks are entered in the cash receipts channel. Why? Because when we paid, we recorded in the cash payments channel. So we now have to reverse that payment considering that the check is no longer valid. So now in accounting, you don't have to go back in the cash payments journal and cancel. If we've got an entry that we want to reverse in the cash payments journal, we record it in the cash receipts journal. And when we want to reverse an entry in the cash receipts journal, we record it in the cash payments journal. All right. We've got omitted receipts. There might have been receipts of money that had been omitted by mistake. Understated receipts. When we say understated receipts, we mean that the amount that was recorded was less than the actual amount. So we have to top up with the difference. Right. We have got overstated payments. Overstated payments, these are payments that are overstated. So we have to reduce them. To reduce payments, we record in the cash receipts journal. Right. So normally these are the items that we get, we use, and then we get our total receipts. Then we've got in our cash payments journal. Right. We start with our subtotal. Just like in the cash receipts, Then we enter the following. Direct debits. Stop orders. Standing orders. Or debit orders. Because these are payments. Interest on unfavorable bank balance. Bank charges. RD checks. Understated payments. Overstated receipts. Omitted payments. Then we get our subtotal. So these are the items that we normally enter in a cash payment, Right. Then we have got the bank account. I will show you one time when we do the questions. It will just be the same that we normally do the bank account, the bank reconciliation statement.
Sorry, sir.
Yes.
On the cash payments, is it not supposed to, or are we reversing the overstated receipts when we are entering them here?
Yes, we are reversing them. That's why we record them here.
Oh, all right.
When we are reversing a receipt, remember that it was too much. So to reverse that, we have to record it in the payments, Right, we start with the bank as per bank statements. Balance as per bank statements. Right, it can be debit if unfavorable. Or it can be credit if favorable. So where you enter, it depends. Remember that on the bank statement, a balance is favorable if it's on the credit. Why? Because the bank statement is prepared by the bank, and the money that you have in your bank account, they treat it as a liability. That's why it has got a credit balance. Right. Then we enter the following: outstanding deposits. I enter on the credit side. Then we've got outstanding checks. They go on the debit side. We normally enter them one by one. Amounts wrongly credited by the bank. It can be possible that someone can put money in their account. Then by mistake, our bank can put it in our account. So we have to debit to clear that. Then amounts wrongly debited by the bank. Our bank can also, by mistake, record payments made by others in our account. So we'll record them on the debit side. Right. Then we also have our balance. As per bank account. We can either be debit. If it's a debit in the bank account, we put it on the debit. If it's credit in the bank account, we put it on the credit side. Then we have our balance. Oh, sorry. So I put the balance in the bank account. Then we'll have these two totals. After reconciling, these totals should agree. So this is the basically how we do the bank reconciliation statement. Any questions before I proceed? Okay, I see that I sent you a document, but unfortunately didn't send. Let me just try to resend it, the ones with the questions that I want to use. Just give me a minute.
Say.
Yes.
Why do we both on the bank reconciliation debit the amounts credited wrongly credited?
This one is wrong. This one. Oh. Thank you so much.
Okay.
The debited should be on the credit side. Thank you so much. Let me I'm just trying to open my WhatsApp so that I can send you these questions. I just realized that by mistake they had not gone through. So we shall be using these questions in this class and on Saturday. So on Saturday, so that we can push, I think I'm also going to do it in online class. I will tell you the program so that we can be able to do the double so that we can cover out to prepare for our assessments. Just give me 2 minutes. It's still loading. Right, have you received the document? I just sent the document, have you received it? Have we received the document?
Yes, we did.
Okay. We are simply doing what you have to do in your books. So the checks, as long as they are still examined, we will still deal with them. Right. Let's deal with the question 1. ARK Traders prepared the following bank reconciliation statement on 29 February 2016. Right, this is the bank reconciliation, so you have to be very wary of the period. This was on 29 February 2016. Right. Then ARK received the following for March. Now, this is the bank statement for March that we received from the bank. Then these are the cash receipts journal and the cash payments journal. Now we are required to prepare the cash receipts journal and the cash payments journal. Then bank account and then bank reconciliation statement. Right. So now let's do that quickly. First of all, you check if these things that are on the bank reconciliation, if they appeared in our bank statement. Right. So if you check this opening balance of 17,000, we have it here on the bank statement. This 20,000 deposit, we have a deposit of 20,000 here. This check number, for checks, you also have to check to check the number of the check. That is 1.6228, we have it here. We have check number 232 of 700, we have it here. Then 236 and 240. 236, we have it here. This one. And check number 240. We don't have check number 240. Right. So what we are saying is that all the transactions except this one. You don't have to look at the balances for bank account because it doesn't go to the bank statement. It did appear on the bank reconciliation on the bank statement for March. That means, please guys, that means all those items that we found, they are now sorted. We and the bank are now agreeing. So the only issue from the items for last month is only the outstanding check 240, which is for 1,000. So we have to check if we've got any further information to see maybe if it was still, then we have to, it will no longer be an outstanding check. But if it's not still, that means when we do our bank reconciliation, that check is still outstanding. So check number 240 is still outstanding. Right. Then the next thing, we have to check the items in our cash receipts journal. These ones. If they appear on the bank statement. And the cash receipts journal corresponds with the debit side of the bank statement. So please, can you just write down the check number 240, which is outstanding check? Can you just write it down? I will need it later. Check number 240. Right. So now we'll go to the bank statement and check if we have these items here. Let me just note them down. There's the 4,500, the 1,200, the 3,700, the 900, the 1,800, and the 400. So we have to go and check if these items, these ones, appeared on the bank statement. If they didn't appear, they will be what we call outstanding deposits. So please, I want you to be noting down those things for me. I'm also noting in case I leave out something. So we have an outstanding check. We have check number 240 of 1,000, which is on the previous month reconciliation. Right, these deposits, I will go to the bank statement. Remember that receipts, they appear on the credit side. Right, so I want you to check here. Right, the 4.5, we have it here. The 1.2, we have it here. The 3.7, we have it here. The 900, we have it here. The 1.8, we don't have, and the 400. So we have the 1.8 and the 400. Those are the ones that are not there. So we call them outstanding deposits. The 1.8 and the 400, which are in the CRJ, but not in the bank statement. If you check here, These ones here. So these ones appeared on the bank statement. They are sorted. But these two, these are the outstanding checks because they are not there on the bank statement. So we call them outstanding deposits, sorry. Then we check our CPJ. And check these things if they are on the debit side of the bank statement. We have check number 242 up to 247. Right. Right. We have got check number 242, here it is, of 3,000. Check number 243 of 5,000, here it is. Check number 244, 44 of 600, here it is. Check number 245 of 4,000, here it is. We don't have 246 and 247. We don't have 246 and 247. That means at the end of the day, these ones, we found them on the bank statement. Then these two will be outstanding checks. They will join that 240, that from last month. So 246 and 247. They will join that 240 from last month as outstanding checks. Outstanding checks. So the items that we found here in the CRJ, that is number 1, number 2, number 3, and number 4, which are in our CRJ and CPJ, but not on the bank statement. They will go to the bank reconciliation statement. Right. Whilst we were ticking, we will also note the items on our bank statement, but that are not in our CRJ and CPJ. Remember, we ticked some of these things. If I still remember, let me just re-tick it so that you can see that on the credit side, we ticked this 20,000, this 4.5, this 1.2, this 3.7, 900. Those are the items that we ticked. But these ones are not ticked. Direct deposit, 2, the direct deposit, and this one, the interest income. So all those items which are not ticked, but on the credit side of our bank statement, they will go to the cash receipts journal. They will go to the cash receipts journal. Right, so let me just show you how we record them. So we're now answering this part of complete the cash receipts journal and the cash payments journal of ARK traders. That's the part that we're now answering. So Jeff. ARK traders. Cash receipts, check the period. That is for March 2016. Details. Right, we start with the subtotal. The subtotal is the total that we had in the CRIJ before we did the reconciliation. So if you can check, we already had a total of, this is the CRIJ, we already had a total of 12.5 before the reconciliation. So we left 12.5. Then we'll enter those things that we found in our bank statement on the credit side, which were not in our bank account, in our CRIJ, which were not in the CRIJ. So then enter all transactions, bona fide transactions on credit side of bank statement, but which were not on the CRIJ. All genuine transactions. So we first have to check if they're genuine. Here we assume that all of them are genuine. So that means this one, and this one have to be entered now in our CRIJ. So we're going to have direct deposit, that's a Eston, $40,000. We have direct Sikali, direct deposits, 2,000. We have interest income, 415. Then our total, this will give us our total. That's it. So we enter all those transactions on the credit side of the bank statement, which we couldn't find in our CRIJ. Any questions? Right. Then we'll do our cash payments, you know. Right. We'll have subtotal. $23,100. Right, this time around, we'll now enter the items that we didn't find on our, or that are on the bank statement, but we didn't find them in our bank account, on our CPJ. This one, remember, was there. This one was there. This one was there. This one was sorted. This one. This one. Right. So those remaining items are the items that we're going to enter in our CPJ, which are not ticked on the debit side of the bank statement. Right. So we're going to have so it's all transactions on the debit side of the bank statement, which were not found in the CPJ, and also maybe correction of errors, if any. But here on this question, we don't have errors. Right, we've got McQueen Insurance debit order 4,000. We have Einaidu RD check. Unpaid check is an RD check, a rejected check, 1,200. We have got West Investments, debit order 5,000. Then we have got the bank fees 500. So these are the items that are in our on the debit side of the bank statement, but not in our books. Right. That's our cash payments, and our cash receipts, Any questions? Right. Then our next part, it says prepare a bank account. Prepare a bank account. So we have a bank account is just like a normal ledger account with a debit and credit side. We have our debts, our details, our folio, our amounts. Right. Right. We start with the opening balance. The opening balance, you can get it if you are given information in this way. You take it from last month's reconciliation. The balance SB bank account in February was 31,700, and it was a debit balance, which was 31,700. That's where you get the opening balance if you are given information in this way. So they have (2016) March 1. Right. We'll have our balance brought forward. This stroke D, that's for brought forward. That is the one that we have from that reconciliation, which is 31,700. Remember, this is a bank account is an asset. So everything that increases the money in our bank account, we record it on the debit side. So these receipts, we received money, they will go on the debit side on the last day of the month. So left 31, total receipts. That's CRIJ. because it's coming from the CRJ. This total here, the 54,915, the total of the cash receipts here now. Then the payments, they reduce the money that we have in our bank account, so they go on the credit side. That's total payments. That's CBJ, which is 33,800. This one is part B actually, the bank account. And then you balance the account. How do you balance the account? You put the larger total as your total on both sides. As you can see here, we've got 31 plus 54, which is about 85. So that's the bigger total. Here we only have 33,500. So that bigger total, you put it on both sides. The bigger total, I think we've done it in our previous classes, we put it on both sides. Then on the smaller side, on the last day of the month, you enter the difference, which you call balance carried forward. So the total also you put the same for the bigger one, that one. Then your difference, that is your 86,615 minus your 33 will be your balance. That 52,815. Then on the balance BD, you then bring it down on the bigger side. On the first day of next month, April 1, it will now be called balance brought forward. So we're saying in April, the balance that will be carried forward will be 52,815. Any questions? So your receipts will always go on the debit side, your payments will be on the credit side, but the balances, they depend. Right, so that's number B. Then number C, prepare the bank reconciliation as at 31 March 2016. Bank reconciliation statement. As at 31 March 2016. So we have our debit, our credit. Right. We'll start with our balance as per bank statement. The balance as per bank statement, you go to your bank statement and check what is the balance at the end of the period. If you can see, the closing balance on our bank statement was 62,115. This is the balance here. So the final balance, 62,115. That should be your balance. We record it on the credit side, unless told otherwise. Then we'll have our outstanding checks. Unless if it was unfavorable, we're going to put it on the debit side. Outstanding deposits are added on the credit side. Outstanding deposits are added on the credit side. And where do we find outstanding deposits? These were the deposits that were in the bank cash receipts journal, which did not appear in the bank statement. Remember, out of all those entries in the bank statement, we found that the 1,800 and the 400 did not appear on the bank statement. Those will be our outstanding deposits. Outstanding deposits, you can add them together. Right, then we've got outstanding checks. We have the ones from last month. We had these 240. remember it didn't appear on the bank statement, so that means it's still outstanding for 1,000. And also we found that these ones also did not appear. All right. So we'd say 240. It's for 1,000. These ones, they go on the debit side. Outstanding checks will always be recorded on the debit side. Then we have got 246. Telecom. Outstanding checks, normally we show them one by one, unlike outstanding deposits that we can add together. Outstanding checks, we normally add them one by one so that we can monitor still checks. 247. You can even put the date. Right. So those are our outstanding checks. Then we'll have our balance as per bank account. When you are taking the balance as per bank account, you consider this final balance brought forward. If it's on the debit, you put it on the debit. If it was on the credit, we're going to put it on the credit. All right. Then we add our two sides. So at the end of the day, if all differences are explained, we should have the same totals. So having the same totals, it simply means that we now know, it doesn't mean that we agree, but we now know where the difference is. And we know what is it that is causing a difference between us and the bank. Any questions? Right, if you don't have any questions, can you try on Saturday we'll do question 2, but then can you try on your own question 4, which is exactly the same format as the one that you've done. Try question 4 on your own as homework. Then we'll do question 2 in class. Thank you so much, and very sorry for disturbing your holiday. Enjoy the rest of your holiday. Thank you so much.